oil rose from lows of about $27 a barrel touched in February to current levels between $40, $43, $44 a barrel. Pick a number, but certainly oil prices are fairly depressed, particularly if you look at recent history. But what do geopolitical tensions mean for the future of Brent Crude and current oil projects around the world? This is the Moneymakers. I'm Bruce Whitfield. Tonight I chat to Magnus Nysveen, who is the head of analysis at Rystad Energy, about what is next for oil and OPEC. Magnus joins me via Skype from Oslo in Norway. It's good to have you with us, Magnus. Give me a perspective, please, on this week's moves in the oil price before we zone out a little bit and have a look at a helicopter view of this market.
So I think that oil markets were a little divided whether they should trust this group of 17 countries or not. So oil prices, they didn't really increase very much before Doha because it was a lot of skepticism in the market on whether this group of companies would agree on something. And now when they didn't agree, the oil price fell very little actually. So it just confirms that the market didn't really put too much trust in that agreement. But now we have also had these strikes in Kuwait where maybe as much as 1 million barrels of oil is at risk to be taken away from the market for a couple of weeks because of a strike in Kuwait. So that is what is influencing oil prices right now.
I mean, if you go back to the 1970s and the stranglehold that OPEC had on the global oil market, and they had a pretty good grip on pricing and being able to dictate production for decades. The wheels, however, in the last 3-4 years seem to have come off OPEC. Why?
Yeah, because of the oil production in the OPEC countries is maturing. So in the 70s, where they had a lot of young, large fields with low cost of production, they had a huge power on the market, and their share of the market was also much larger. And then in the 80s, then it was the Saudi Arabians. They had cut production quite a lot, and you have had this war between Iraq and Iran. All these events created a lot of overcapacity. So OPEC was very strong also in the 80s and in the 90s. But now in early the 2000s, they lost market share, lost strength, and then Saudi Arabia, they increased their production quite a lot and gained some strength again. And today, production is falling in most of the OPEC countries, so it's only Saudi Arabia, Iraq, and Iran that has some potential to continue increasing. The rest of the OPEC countries, they are in production decline.
Now, that suggests that there is a fair degree of dysfunction within the cartel of OPEC.
Yeah, of course, the OPEC, they have Saudi Arabia and Iran. They are, I think we can call them enemies more than friends. And then you have the Persian Gulf countries. They have strong production. So you have Saudi Arabia and the Emirates and Kuwait. They are the kind of core of the OPEC. And then you have the rest of the OPEC countries that has a lot of economic problems, and they want a quick increase of oil price, which Saudi Arabia doesn't want because they are afraid of the US shale. So there is so many factions within OPEC now, so it's very hard for them to agree on anything going forward.
I was in Davos earlier this year and saw the Iranian delegation. Everybody wanted to talk to the Iranian delegation. And after 10, 15 years of sanctions, the Iranians are terribly keen to generate foreign exchange. And they don't really care about the motives of OPEC, do they? If they can get $40, $43, $45 a barrel for oil they produce, they'll take it, thank you very much, after years of foreign currency drought.
They are not in a situation of being too cooperative. They want to take back the production they lost due to the sanctions. So they will do whatever it takes to get back to those levels. But we that are studying the fields in Iran, we actually think it will be much harder for them to gain back the lost production over a short period.
No, certainly it's a long-term game that they're playing. The Saudis and their fear of shale gas is the belief that if they can keep the price depressed for a period of time, that the shale gas industry dies a death. It seems that's an overly ambitious view as well.
Yeah, the U.S. Shale oil has come to stay. It will not grow as fast as it did in 2011, 12, 13. But we have to count on U.S. shale coming back. But I don't think it will come back so strongly as it was 3-4 years ago.
Certainly that shale industry is an interesting one, and it does change the dynamics, of course, the geopolitical dynamics of that entire Middle Eastern region. When we look at where we stand right now then in terms of supply and the ability of global markets to keep consuming fossil fuels, what is your outlook in terms of continued demand and, of course, ultimately for us in South Africa, the big price takers as far as the oil market is concerned?
We think that oil demand is very robust. So we think that oil demand will continue to grow by around 1 million barrel or more for every year for the next 5, maybe to the next 10 years. Supply is at risk because the extraction of oil gets more and more expensive, and they have to dig more into unconventionals. And now, because $300 billion of projects has been delayed several years, we are now seeing that the global production of oil is falling. So we think that we will see a quite brutal and dramatic rebalancing of the market much sooner than you might believe by only reading headlines.
So is it a 6-month rebalancing? Do we see oil rocketing back up to, say, $60, $70 a barrel by year end?
I think that is very likely, yes.
And that, of course, has very significant global implications in a global environment where growth is quite depressed and where energy is absolutely pivotal to growth in so many countries. But ultimately, that could be good news for struggling economies like Angola. I don't know how much you study the oil market in Angola, Nigeria, Ghana, for example. They've really been struggling in the last 18 months or so with sub $50 oil.
We have realized that the oil price now is too low for the global economy. We didn't really think about that possibility before the rout. But now with oil prices at 40, we see that the OPEC countries, they are important consumers in the world, and they are requesting goods from emerging countries. And now with deflation pressure in Europe and Japan, very low energy prices are adding to that deflation risk. So I think that the best for the global economy now is that the oil recovers to sane levels of $60, $70 very soon.
That then provides the Middle Eastern producers of those fossil oils a level of certainty in terms of their pricing. But does it not then reignite the appetite for shale gas once again? Because as that oil price rises, so then does the price that the shale gas producers in places like the United States can get for their product.
Yes, the shale oil can satisfy the growing demand for oil, but it cannot replace all the decline in all the fields around in the world. Because if you have the increased demand of 1 million barrel every year, you also lose 4 to 5 million barrel from all the producing fields. And shale oil doesn't have more capacity to grow than 1 million barrel per year. So we need all kinds of other sources of new supply to balance the declining oil production. So shale is an important part of the picture. We need American shale oil, but it will be far from enough to balance the market going forward.
What does it do to the geopolitical balance then in the Middle East as we see oil recover in your scenario with a 50% uptick from current levels?
I think that we will still see flows of Middle East oil into the US because of the refineries. They are adjusted for Middle East oil. Of course, this has changed geopolitical a lot, but I still think that Saudi Arabia and the Middle East will be important suppliers of oil to the US going forward. So I don't see a complete disconnection of those very important relationships.
My thanks to Magnus Nysveen, who is the head of analysis at Rystad Energy. He is on the line to us from Oslo in Norway this evening. Thank you very much for joining us tonight. And thank you also for watching. Do consider the possibility of what happens to the South African economy if we get ourselves in a spot of bother with oil, up 50% from current levels. The petrol price already is having a negative impact on households. It's having a negative impact on growth in the economy. However, it's good for other African economies. We've got countries like Angola, countries like Ghana, and countries like Nigeria dependent on higher oil prices to strike some kind of balance. Perhaps that $60 to $70 postulated this evening is the level where we get some kind of happy medium. Till next time, bye-bye.